graduated from the University of Georgia in December 2019 with a degree in finance. I actually glad to be here today. We're going to be talking about credit, and regardless of your major, it pertains to you and your personal finances and everything. So hopefully we'll learn a lot today together. And we'll just go ahead. So in corporate speak, this is called housekeeping item. This is a quick disclaimer. This is like right around my nap time, so I probably wouldn't be here. So good on you for being here, honestly. Today we're going to talk about why credit matters. There's advantages and disadvantages to it, so we'll discuss some of those. We're going to understand the components of the credit report, go through all that, understand what goes into a credit score, what is a credit score. Then we'll understand common credit scenarios, things that might come up in your life that pertain to credit that you can be aware of, and how to build or rebuild credit. Okay, so firstly, we're just going to talk about why credit matters, and it matters to every one of us in the room. There's entities that when you're applying for loans or services that use credit to kind of qualify you as a candidate. And then of course we have the disadvantages. So first of all, I'm going to have a few questions that anybody can feel free to raise your hand and answer. Like I said, I probably be asleep right now, so I understand we're a little tender today. But first off, does anybody know what is credit or have a yet? Yeah, absolutely. Yeah, so there's a lot that goes into it. All of that applies, but my own personal definition of credit is like your ability to borrow money or to access goods and services. And so, why does having a positive credit matter? It's because the better your credit score is, and the better your credit is, the more access to goods you're going to have. And generally, as a rule of thumb, the less you're going to be paying for those goods and services. So, talking about some of like the opportunities you have here on the right. Good credit allows you to build assets, right? Get a home, get an auto loan, things like that. Also starting a business. It depends on where you're getting your money from, your business loan, but they might use the business under personal credit to kind of determine if they want to give you a loan. And something interesting that's not mentioned here is that once you have like a legal business entity, you actually build credit as that business, and your business eventually will have like their own credit score. Employment nowadays, employers will track credit scores to see, are you financially dependable? It can kind of help differentiate candidates in that way. Insurance, you'll find out, like, I don't know if you guys pay for auto insurance yet, but like they've been raising my rates. Like they'll do anything they can to like charge you more money. So they'll use your credit score, like sometimes positive or sometimes negative, depending on where your credit score is at. And then renting, landlords will typically check the credit score as well for credit reporting. So there's definitely a lot of advantages to using credit cards, auto loans, things like that. The more you use credit, you're building up a history on yourself. And if you use it responsibly, you're building up a positive history that will help you again have access to certain business services. So another polling question, you guys think of like any of the advantages of using credit. You can think of like a credit card or any type of loan. Absolutely, yeah. If you have a big credit history and you want to go for something like a bigger ticket item, that will help. Sure. Yes, exactly. Yeah, so the more you use credit, the more you build that positive payment history, the lower your interest rates are going to be just generally. Those are all. So first off, I usually it's easy to use. Emergencies, if you get an emergency, like the car breaks down, you don't have to worry about, do I have enough money in my bank account? If you know that my credit limit will cover this purchase. So it's a lot of peace of mind in that regard. Safety, credit cards are a lot safer than like cash. It's $20, so good luck getting that back. But if you lose your credit card, you can cancel it. So it's just a lot of advantages there. And also, if there's like fraudulent purchases, if a fraudulent purchase happens, like a debit card, if you've ever been through that, you kind of have to like buy keep the mail, get any redemption there. But credit cards are usually a lot more in that process. Use of goods and services, you don't have to pay upfront. You don't have to have the money necessarily there, but also you want to plan on being able to pay it back. Ease of returns and purchase protection. Some credit cards offer like purchase protection. If you buy something with your credit card and it gets damaged or lost, they'll replace it for you, depending on what type of insurance protection you have. And of course, you're building credit. The more you use your credit card, the more you pay it off, you're building credit over time with that positive payment history. Okay, so of course, everything has advantages and disadvantages depending on how you use it. So, of course, if you carry over a balance in your credit card into like another month, statement, you're gonna have to pay interest on that balance, which means if something you bought for $10, you're gonna have to pay more than that. Temptation. So like, I can do this, why not? Like, buy stuff. But you really want to just kind of be cautious. Some people, they might not, apply for credit cards because they're scared of like, it might be too tempting. It's definitely a consideration, but it's more important to start building credit and just make sure you're using things responsibly. Probably don't buy things that you don't have enough money to cover generally. And of course, you're committing your future income to paying that off. So like, you have too much debt and too much minimum payments that you have to make, you might not be able to afford like the basic necessities. And then repossession for like an auto loan, if you don't pay off your auto loan or 6 months since you made a payment, they have the right probably will repossess. Okay, cool. This next section, we're going to talk about understanding your credit report, how to obtain it, the information within your credit report, the different sections, what they mean, and then how long that information can remain on your credit report. So credit reports are super important pieces of financial information. I'll probably say this numerous times. It's kind of like a report card on your credit history. It's information that includes like the type of credit accounts you have, payment history, credit limits, things like that. And it's prepared by the 3 nationwide credit reporting agencies, which are Equifax, TransUnion, and Experian. I work for Equifax, so I won't say who's best there, but it's fun. And something worth mentioning here is that lenders might not report the same information to all 3 agencies. So what's on your Equifax credit report might differ from what's on your TransUnion Experience. So just something to keep in mind. If you have access to all 3, you're able to obtain all 3 for free. So you definitely want to check costs. Just understand there might be differences. So this is where you want to get your free credit report, and I'm sure we'll be sending out the deck and everything, but you can really just Google like free credit report. You have the ability to get it. I believe Equifax provides it like 6 times a year, so you can check it periodically just to make sure things make sense to you. Okay, cool. So we're going to go over how to read a credit report, which is really important because lenders and other people are reading this and using this information to decide they're going to give you something. Pretty much. So it's important that you yourself understand everything that goes into it. So like I said, it's a financial report card. And again, like information reported to agencies might differ. Some things might be reported to one agency and not others, but generally just the type of information that gets collected. So your credit summary, it's just an overview of everything that's in the credit report, all these detailed sections, just a higher level view of that. Next, we have our revolving mortgage installment accounts. Revolving accounts, if you think of those as like your credit cards, this is where you have a minimum monthly payment, credit limit, and then mortgage accounts, these are like your real estate loans where you have a required monthly payment and you pay that until the loan is gone. Installment accounts are very similar to mortgage accounts, they're just for other assets like auto loans, student loans, that kind of thing. Other accounts, these are going to be accounts that are not covered in these other 3 categories. These are going to be like your child support obligations or any rental agreements you might have. And then a consumer statement, this is something that you can send to a credit reporting agency. It's like kind of like a explanation. Maybe if you dispute something on your credit report and it doesn't end up exactly the way you want it, you can write kind of like a disclaimer explaining the situation or explaining something that happened with an account. And it's not going to be using your credit score, but it's something that whoever pulls your credit report will be able to see that. Personal information, pretty straightforward, your name, addresses, things like that. Inquiries, this is important because inquiries happen pretty frequently throughout your lifetime. A hard inquiry, that's like when somebody's actually pulling your credit report, and that counts towards your credit score. It's factored in, and it lasts. You'll see hard inquiries for up to 2 years on your credit report. The soft inquiry, that's kind of like when you're checking your credit report yourself. Like they're not going to take that into account in your credit score. Also, like pre-approval for like credit cards, that's also not going to impact the credit score. Public records, these are records that you can obtain, like anybody can obtain. Local, state, and federal courts. It pertains specifically to like bankruptcies, which impact your credit score. There's a Chapter 7 bankruptcy where basically like you're not paying your debt off, and that'll remain on your credit report for 10 years. And then Chapter 7, it's like you agree to like a payment plan, which is obviously like reduced amount, like what you totally owe, and that's going to remain on your credit report for 7 years. And then collections are here to stay out of collections if you can help it. When you get sent to collections, it has a negative impact on your credit score, and it stays on your credit report. So everything you can to avoid that. Okay, cool. Yeah, so we've alluded to credit scores a bunch already. You might have an idea of what credit score is, but now we're going to talk about how they're calculated, different types of scoring, and then the elements of the credit score itself. So another polling question, by a show of hands, does anybody know what their credit score is? That's a really decent amount. Not a trick question because it depends on where you're looking for your credit score because it can be different based on what type of score you're for, which is confusing. Generally, they're going to be like within the same like range. Okay, so a credit score is a three-digit number between 300 and 850, and it's basically instantly tells like a lender kind of like your risk, how risky it is to lend you. Question. Yeah, so your true credit score, we'll go into in a second. Like, it's a great question. There's two main credit scores that most lenders are using, but it depends on what the lender is pulling. They're not going to be like wildly off, but it's important to check their credit reports because that's where your credit score is going to be built off always. So if something's incorrect in there, that could have a negative impact on your credit score. But it really just depends on like who you're lending from. And to your point, there's different types of scoring models, so things can kind of vary to certain degrees. So the two most common are your FICO and Vantage score. So if you check your FICO score, that's probably oftentimes what lenders are going to be looking at in their assessing your application. Same thing with Vantage score, it's also very common. What the difference is between these is that there are independent companies that have like data and analytics teams that create these models and like try to output a three-digit number. So FICO might weigh certain things on your credit report a little bit differently. And so that's why you get some degree of variance. And also, FICO's using like your Equifax credit report, there might be stuff on there that's not on yours. So those are things that can lead to like differences. But generally it's going to be probably within the same range. So this is really important. This is what makes up your credit score. So if you're wondering like, what can I do to like impact my credit score? Like it's kind of like a until after this presentation. I don't really know some mystical number. But the biggest aspect that makes up your credit score is your payment history. So that's why it's super important to not miss payments and just build a positive payment history. It's the biggest factor that goes into your credit score. The next biggest factor is credit utilization. So there's a magic number where you want to be using 30% utilization rate. So let's say you have like a $10,000 credit card limit. You want to be using no more than $2,000, which is that 30% limit. And this pertains only to those revolving accounts, so like the credit cards. Length of credit history. I had my first credit card when I was in high school, and my parents were like trying to not let me do that for all the same reasons that we said there's disadvantages. But like I'm looking back, I'm like super happy because I've been building like credit history since I was 15 or something. So like that's a huge factor. Just more credit or the more positive payment history you have over time, it's just huge components. New credit. So if you're applying for new lines of credit, these are going to be like hard inquiries, which impact your credit score. Because if you kind of think about it from a lender's perspective, if I'm somebody that's like applying to a bunch of credit cards, it's kind of like maybe a little bit of instability there or something that might negatively impact the credit score. And lastly, credit mix. This is just like the different types of credit you have. So like you have a mortgage loan, an auto loan, credit cards, you're paying all those on time over time. That's going to build a really strong credit score. Okay. So now we're just going to talk about some like common scenarios that you might encounter throughout life pertaining to credit. So one would be like disputing incorrect or incomplete information. That's why it's super, super important to check your credit score because or seeing your credit report, there might be something on there that you don't agree with or just don't have any clue about. Which would be like unfamiliar, like, maybe you have a collections account and you have no idea what this is. It could be, indicative of like fraud that happened on like your name, and trade lines and like credit cards or other accounts. So this is kind of like the types of information that you want to keep an eye out for when you're looking at your credit report and things that you would possibly want to file a dispute. So errors in identifying information. Is your name spelled correctly? Or your address is correct? Family number, social security, date of birth. You want to check all that information, make sure it's being reported accurately. Incorrect accounts. So, if you don't, you should be able to recognize all the accounts that you have on your credit report. If you don't, that's like a strong indication that it's fraud. Like somebody opened kind of out on your behalf. And then you hear like horror stories about like parents doing that with like their children and stuff. So, I mean, I trust my parents, but I still check my credit. Closed accounts that are reported as open, the account might be closed, then it might be past that 7 years that it should be on your credit report, and you want to file a dispute to like have that removed. Accounts that are incorrectly reported as late, you can pay on time, but if it's reported as late, you want to file a dispute. Like, we'll go over what kind of evidence you want to attach to the process of filing a dispute here in a minute. Incorrect date of last payment, these are just things you want to check. Same debt listed more than once, like debt listed twice, accounts with incorrect balance. So those are pretty common scenarios where you just kind of get filed. So disputing incorrect or incomplete information. A more common scenario is when like you're a junior or a senior. Sometimes you'll have like your parents or your children's information listed on your credit report. So if that pertains to you, you might want to keep an eye out for that. Anyway, here's some links where you'll file disputes. When you file a dispute, you want to check all three credit reports, and if the item you want to dispute on all of those, then you'll file a dispute with all credit report agencies. The individuals, you should complete the steps 1, 2, 3. We'll go through it. Here's like kind of like what happens: incorrect names, expired debt that's listed, debt amount inaccurate. Some of those same scenarios we discovered. Those are prompts you want to start filing a dispute. So you'll gather all that information there. You'll draft a dispute letter or there's online forms you can go through each credit bureau, and you'll attach that information in this dispute. And it's important if you ever have to go through this, to make sure you keep record of everything you're doing, keep a copy for yourself, just in case you need that evidence. Okay, awesome. So now we're going to talk about how to build and rebuild credit. I'll just skip through the intro here. So since we're living in like a more data-driven world, they're starting to introduce new ways of like assigning credit scores or just trying to give people more access to credit. So one thing you can do to improve your credit score is if you've been paying your rent on time, you can go to your landlord and say, hey, do you submit this to the credit bureaus, or would you consider doing that? And if they end up doing that, then that shows just another source of, hey, I've got this positive payment history. And then now you see more and more that they're starting to use non-traditional data. So this could be like, even your streaming services where they say, oh, you've been paying Netflix for years. Like that shows like reliability. Same thing with your telephone and other utilities. All right. So now we're going to talk about some of the best practices. And I mean, this is kind of probably a review. You guys probably know a lot of this, but there's so many credit cards and things out there. In general, it will promise to like review at least like 3 of the same product across different companies. It's possible that the first card that you look at, it might be something like shady or just charging an astronomical interest rate. They definitely want to shop around and just have to see what your range is. And like I said, compare interest rates. Always read the fine print. It can be very boring. Starting to get fooled like AI, and just upload it. Just like it and keep going crazy in here. But yeah, just definitely check the fine print because there could be some payment term that you aren't aware of that you end up violating, which will impact your credit score. So if you're trying to build credit, maybe let's say that you're potentially not in a great place. These are types of vehicles that you can pursue, like the builder loans. It's kind of like a back loan. So like they'll give you a loan, but you need for that loan amount, you need to have like cash up to whatever that limit is. The same thing for a secured credit card. You have to pay like a down payment, and they give you that credit limit. And I know it's kind of like, oh, why would I, pay a down payment, get my money up front, and then I'm allowed to use it on a credit card? Well, you're building credit to use that credit card, the same as the other credit card. But this is for making your credit score not a great place. You can't get certain credit cards. It's a great option for you. Okay. So here's some best practices. Do your credit reports at least once a year. I think I do it like twice a year. It's pretty interesting. I mean, like it's like kind of like your biography. Like you see where you've been like your whole entire life, at least since you started being like a financial participant, things like that. So review that, and then of course if you see incorrect information, follow the proper channels and file a dispute. Pay everything on time every month. Remember that part of your credit score is 35%. That positive payment history is just going to your credit score. As long as you're paying everything on time, over time, you're going to go. Pay down all debt. So it's good to have that talked about good debt, bad debt. That's bad debt being like high interest rate, things like that. It's good to have debt, but as long as you're in that sweet spot where you're below or at that 30% utilization rate, you don't want to have too much debt because that's kind of like a red flag. Like when you pay all that debt down, so people might not be willing to lend to you. Use student loan repayment options. I have student loans, so I've done this where I'll make sure figure out what I'm comfortable paying. If you're paying too much, feel like you're paying too much for your student loan, you can review the repayment options, get that lowered. The reason being you want to make sure you're covering your base utilities, rent, things like that. And then also just making sure you don't miss it. Limit your applications for new credit. The general rule is only a few times a year you want to apply for a credit card or an auto loan. Because the more hard inquiries you have, it seems low students. And then credit freeze, that's a good way to protect yourself from fraud. It's just another layer of defense. If you have your credit frozen, you have to unfreeze it before you can apply for a loan. Identity theft, which is it's huge in the world we live in. Hopefully nobody's been impacted by that, but I'm sure someone might have somebody has been. So these are pretty straightforward. There's identity protection solutions. I think we sell some really cool products where we'll monitor the dark web for your personal information, make sure it's not on there. Alert you if it is, or proactively do something on your behalf. Blocking freezing credit reports. The reason I just said, you can't do anything until you freeze it. There's an extra layer of protection there. Install and update antivirus software. So the reason we're doing all of this is because we don't want people to get our information, apply for loans on our behalf, not pay them at all. Obviously, they're not going to pay loan credit for you. So you want to protect yourself as much as possible. Do everything you can do the cyber side of things. And same reason you don't want people hacking their password manager. Again, the same. Public Wi-Fi. I know I'm tempted to hop on public Wi-Fi from time to time, but you hear voice and sketchy stuff happening. So if you can avoid it, please do so. Purchase gift cards from a reputable source. I can. So I personally don't ever do that, but it's probably a bad idea. If you're sketched out, it's usually the general rule. Never give your personal information to anybody. There's not a single company out there that will reach out to you proactively and ask for that information. So if that happens, then you should be aware. I know some companies will reach out to them, if you're locked out of an account, and then they'll ask for stuff, but no one's reaching out to them asking for that information, so don't share it. Okay, cool. So we are coming to the end, and I'll take time for questions. But like I said, this is general education. I can't really give you any personal financial advice, anything like that. If you find me on the street, have a conversation with of what maybe I would do. But we do partner with On the Rise, and they're a nonprofit organization working in West Atlanta, and they offer free sessions and things like that. They'll give you free. They'll go through your credit reports with you, and I think we might talk about that a little bit more. I think on campus they have a session coming up soon. But again, here are some things that are super helpful. I'll stop. If you have any questions. Oh, also let me say, be careful to not ask for personal financial advice, but I can tell you general facts and things like that. Okay, cool.